India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning and it's expected to be a good morning because the positive overnight cues, I think, will rub off. I think it's more of the same all of this week, which is lower dollar, lower oil, and broadly higher equities. So we're coming to you live as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, good morning.
Hi, morning Prashant, morning Nigel. And with the way the market surged in the last, I think, half an hour yesterday, probably is telling us that there is a fair amount of fuel, some ammunition out there, 1% away from the all-time high. So let's see how it goes.
Well, and it appears now that August scare that we had is a distinct past, right? I mean, just August 2nd, August 5th, we were all wondering whether or not we're bracing for a bigger correction. All of those losses have been made up. So the bulls are fighting back.
As usual, right? Yeah. What's new?
The ferocity of the comeback is something which is very, very telling. It doesn't happen so fast. I mean, 10 days, the market loses 6-7%. And the next 10 days, it makes up for everything. And that is exactly what we've done. We'll sort of put out some historical data in terms of what it means for future returns a little later on the program. But as always, let's begin by telling you what you need to know as we begin a new trading session. So, you know, yesterday, same time, U.S. markets were down a little bit. They'd broken this sort of 8-day streak. But, you know, I was saying that this is not, it's of no consequence because it was a slow drift lower. Mind you, on the way up, I mean, these are summer markets in the U.S. and, you know, volumes traditionally in this period are low. I mean, lower than average, sometimes 10, 20, 30, 50%, even 50%. So be that as it may, you have markets which have bounced back. So about 0.5% of the S&P, Nasdaq about 0.6%. And these are changes we are waking up to. Dollar index, it continues its fall. I think, 6 trading sessions back, the dollar index was at about 103 plus. We're at 101 now. And that's a big fall we've seen. Now, the major supports for the dollar index come in about the 100.3 to 100.82 levels. We're very close to it, precariously close to it. Under it, it perhaps opens up fresh downsides for the dollar index. We're probably talking about, the index moving into 2 digits. Oil was down once again. That's the other one. It's down 1.5%. We're at $76 a barrel. And this is quite something. It's broken below supports, which is 76.62, 76.98. What are these? These are the February and June 2024 lows. They also coincide with a 76.4% retracement of the move that we've seen for oil. So here again, it's too sharp, and there's some opinion that perhaps we see a bit of a tactical pullback, but this is marked weakness for an important commodity there. I just want to highlight data. Now, because macro data-wise, it was a very light session, this week largely is, there was one data point which usually gets ignored, which got outsized, sort of commentary and attention. So the US BLS, which compiles all economic data, they put out revisions for non-farm payrolls for the year ended, 12 months ended March 2024. And guess what? They've revised non-farm payrolls number lower by 818,000. I mean, the expectations out there on the street were between 300,000 to 500,000, maybe a little higher even, but this was certainly greater than expectations. What does this mean? This means that you adjust this, divide this by 12 and sort of take these number of jobs away from monthly additions. The adjusted job growth now stands at between 170 and 180,000 per month for 12 months ended March 2024 versus what the reported number was, which was 242,000. The import of this data is that the labor market was not as strong as what we all kind of sort of traded and looked at and analyzed, etc. It's weaker than what was reported. It's still stronger than usual, but it's weaker than what was reported. So I think that this only adds to the narrative that labor market is perhaps not as strong as some have been making it out to be. You also had July FOMC minutes, which were dovish. And the focus is, the dual mandate, employment and inflation for the Fed. But they're now saying perhaps labor data and the weakness there is more important to focus on. We'll be more reactive to that as compared to inflation, which had been the focal point. You will hear from Powell at Jackson Hole. That's on Friday. And will he provide dovish reinforcement? We'll see. The markets are still toying between, is it going to be 25 or 50 basis point rate cuts in September? Will it tilt sort of expectations over on one side, 25 or 50, something we'll watch out for. Sort of circle back to the levels, and I think not very much changes. I've been saying this for the last 3-4 days now, 3 days, that we are perhaps looking at the path to a new all-time high. The previous high first is becoming clearer and clearer. Matter of time. So you saw a follow-up buying yesterday. You had a dip, early dip. It got bought. Spent the next few hours absolutely flat. And starting 245, you had a big surge. So it was a good session as far as the Nifty. And actually, even the Nifty Bank picked up pace quite a bit. So levels here for the Nifty, I'll start with supports, come in at 24,503, which is the 20-day moving average, and then the 40-day exponential moving average, which is 24,245. So these are the two levels on the downside which we need to defend. And of course, the upside, it's the highs. Bank Nifty pulled back nicely from lows. Supports here come in at 50,340 and then 50,178. These are nothing but the 50 and the 61.8% retracements of this very short impulse 3-day move higher that we've seen. And resistance for the Nifty Bank comes in at 51,025 and then 51,280, which is, as we said yesterday as well, the level where the index will meet a falling trend line for the Nifty Bank. GIFT Nifty will indicate how the start is looking like this morning. About a 60-odd point higher start, and why not? It's a pretty sort of conducive picture, globally speaking. Surbhi.
Absolutely. There's lots of green across Asian screens as well, Prashant. In fact, you're talking about the probability, right? Whether it's 50 basis points or 20 basis points. There will be a cut. I think that's almost a near certainty. How much? Well, if you go by the CME Fed Watch, then the probability of 25 basis points is far higher right now. 62% last time I checked those stats, and about 38% for a 50 basis points rate cut. So let's see which way the Fed finally tilts. Speaking of central bank action, there was the Bank of Korea meeting this morning. They've not done anything with rates. They've left the benchmark rates unchanged at around 3.5%. The data out of Japan continues to be very, very strong. Even this morning, we've got the composite PMI numbers out of Japan, and they're building on gains. The number has now climbed up to 53 from 52.5. So largely speaking, macros out of Japan are strong, while those out of the US have been patchy. And now we have to see what the central banks say. And Jackson Hole is going to be very, very interesting. It kickstarts later tonight. Tonight our time, US time kicks off. And then the Powell speech coming in tomorrow is going to be in focus. Well, let's come back home. Yesterday was a very interesting session because the market spent the entire day in a 100-point band and then decided to break out in the last 30 minutes or so. That took the Nifty to 24,700 plus, and now we're just about 1% away from the all-time highs. On the fund flow side, it's the same story repeating. Yesterday, the buying was quite pronounced, about 3,000 odd crores from the FIIs, a little more pronounced perhaps because of all the blocks that are happening. So we need to keep that in mind as well. FIIs were sellers to the extent of 800 crores. At least it wasn't a 4-digit sell figure. It was a 800 crore rupee sell number. Another interesting trend, and let's see if this continues today or not. Yesterday, the micro cap and the small cap space was buzzing, and how? Those indices were up about 1%. The market breadth, remember, was very, very strong. So is that going to remain the same? Is that where the action is shifting? That's what we need to see, because the Bank Nifty continues to underperform. It's a distance from its own all-time high, and there is no follow-through. It's always one day up, one day down. That kind of pattern playing out on the Bank Nifty. Finally, today I'll look out for the quick commerce space, because yesterday's comments made by the Commerce Minister, Mr. Piyush Goyal, they were noted. There was some reaction on stocks like Delivery and in fact even Zomato yesterday. Let's see how it plays out, whether this is just rhetoric and chatter at the political level, or indeed whether policy is going to be a little more stringent for the quick commerce players. Speaking of quick commerce, Zomato is going to be on our radar because the deals finally happened. They'd already declared their intent, and now there's a closure. They will be buying Paytm's ticketing business, Insider as it's called, and they're spending about 2,048, because Zomato said this very, very clearly, that going out is going to be the next big engine for the company after quick commerce And of course, the base business going out is the next big thing. So Zomato in focus as well. Nigel.
Well, that's right. One of the reasons that we saw a late surge yesterday was the Nifty Bank. It played out the weekly expiry, and late in trade, that saw a big surge. So it ended as a bit of an underperformer, but there was a good bounce that we saw from the lows of the day on the Nifty Bank, as that graphic point tells you, which gives support to the Nifty as well, going by the overlap that we have out there. But the Nifty, well, it's on the 5-session winning streak. It's recovered all the losses. Remember, on August 2nd and August 5th, the global markets went into a correction for all of 3 sessions, I think. And after that, we did bounce back. So we're back above those levels that we saw on August 2nd itself. What did the FIs do? They unwound some mild longs, and they added some shorts. For the time being, the long positioning continues at around 52%, and in absolute terms as well. Both the clients as well as the FIs, they're mildly net long. You don't want them to be on the extreme of either end. So both of them, as of now, the clients as well as the FIs on the long side. One thing that I'm liking from the F&O space that's coming with regard to stock-specific action is that currently there are around 12 stocks that are on the F&O ban. Last week itself, that number had gone to around 20 stocks. So that number has come down. Normally, when there are too many stocks in the F&O ban, that gives you a bit of an uneasy feeling. And yesterday, you had a couple of stocks that did come out of the F&O ban as well in yesterday's trading session. You had Bandhan Bank that did come out as well from the F&O ban. So number of stocks coming down with regard to the number of stocks in F&O. Well, ban, you like that. Let's focus on the expiry then, because today is the weekly expiry that will be played out as well. You'll have the 24,800 call. Well, that was very active in trade, and the 24,700 put. So going by that level and going by the premium at around 50 rupees, the 24,850 to around 24,900 level, that becomes the resistance of the day. In all probability, we open closer to that. So we'll have to build on to gains, because that's the resistance zone, and that's what data is telling us, that the bears will want to defend this mark. But till the markets, they're holding above the 20 DMA, it continues to remain buy on dips, and the trend is up. For the near-term support today, going by the options data, it's at around 24,650. The Nifty Bank has underperformed. It underperformed yesterday as well, but now it's in a very, very tight range. It's holding very, very close to this crucial resistance mark. So you'll want it to get above that mark. It's ended closer around the 20 DMA, but around that 51,300 mark becomes extremely important. But it's a stock-specific market, so let's focus on the 2 stocks that I'm looking at. One is Vedanta. The stock has shown a good recovery from the recent lows. Remember, it corrected quite a bit after seeing that peak, and now, in fact, it's showing signs of coming back. So good bounce is what we have seen on Vedanta. There's the dollar index that's weaker, which is good for LME prices. Aluminium deficit as well, that those stocks have resurfaced. So Vedanta is a stock that I'll be tracking. And the other one is Godrej Properties. I was looking at the technical levels. It's very close to the 100 DMA. So that's going to be the important mark that, if it can hold on to this 2,850 odd mark, then maybe, in fact, it can bounce back. But that's the crucial mark. So I'm watching both these 2 stocks.
All right, Nigel, thanks very much for that. Some really sharp moves, especially on things like the dollar, which has been under pressure